Okay, something absolutely massive is happening right now, mostly unseen, just beneath the surface of the global economy. We're talking about a huge shift, the largest voluntary transfer of private capital in modern history. So today, we're going to dive into this great migration of wealth. We'll explore what's driving it and uncover the really surprising role that AI is starting to play in this high-stakes game. Let's get right into it. First, let's just wrap our heads around the scale here. According to a brand new report from Henley and Partners, by 2026, we're looking at a projected 165,000 millionaires who are expected to pack up and move to a new country. And just to be clear, this isn't just a few wealthy people changing their address. This is a historic exodus of capital, talent, and influence. And that, of course, brings us to the big question. What on earth is driving this? Why are the world's wealthiest people and their families looking for new shores in numbers we've just never seen before? Well, the answer is this really complex mix of risk, opportunity, and a deep search for some stability in what feels like an increasingly unstable world. All right, first up, let's break down the what and the where of this great wealth migration. You've got to understand this isn't just about finding a sunnier climate. It's a strategic, global relocation of assets and ambition. So, where is all this money flowing? Well, the top spots are a mix of the usual suspects and some real rising stars. Leading the pack by a long shot is the UAE, which has just engineered this incredible wealth attraction strategy. It's followed by the good old USA, which always has a strong pull, and then you see this cluster of European countries, Italy, Switzerland, and Portugal, that are all offering these formal investment migration programs. To really get the stakes here, you just have to look at this tale of two countries. On one side, you have the UK, which is projected to lose a staggering 16,500 millionaires this year alone. That's being driven by things like closing its investor visa and making big changes to the tax rules for foreign residents. And then, on the other side, you have the UAE, set to gain almost 10,000 millionaires. Why? Because of its golden visa program and, of course, its zero income tax policy. It's a perfect illustration of this global competition for capital playing out in real time. Okay, so that's the what. Now for the really interesting part, the why. What is pushing all of this? The simple answer is risk. The world's wealthiest are looking at a landscape of just unprecedented uncertainty, and frankly, they are voting with their feet. And what's the number one risk keeping them up at night? JP Morgan's latest report on family offices, which are basically the private wealth managers for the super rich, is crystal clear. A whopping 64% of them point to geopolitics as their top concern. Things like trade disputes, political instability. These aren't just abstract ideas anymore. They are now the primary drivers of capital flight. Now, here's where it gets really, really interesting. There's this massive paradox. Well, the majority of these family offices say they want to invest in the AI revolution, and who wouldn't? A shocking 57% of them have zero exposure to venture capital. And that's a huge deal because venture capital is the engine room where the next generation of AI actually gets built and scaled. So you see this huge gap between what they want to do and what they're actually doing. They know where the future is, but they seem to be struggling with how to get there. So if the old strategies are feeling shaky and these new opportunities are hard to get into, what does the new safe haven playbook even look like? Where is capital actually going in this crazy volatile world? Well, according to some analysis in the CFO's Times, the whole hierarchy of what's considered safe is getting a rewrite. Gold is still king, no surprise there, the ultimate hedge. But check out number 2, the digital rupee. Yeah, a central bank digital currency, basically a digital version of India's official money, backed by the government, is now seen as a liquidity lifeline. And meanwhile, the Swiss franc is gaining ground on the US dollar, which is now being seen as a much more volatile reserve currency than it used to be. But wait, here's another puzzle for you. Even though all the experts are saying gold reigns supreme, that same JP Morgan data shows that 72%, almost 3/4, of family offices have no gold at all. This points right back to that disconnect between seeing the risk and actually doing something about it. The key takeaway here is this: investors are struggling. And this gap between knowing what to do and actually taking the right action, is exactly where a powerful new tool is starting to change the game. And that brings us to our next section, the rise of the AI investor.
The technology at the heart of all this is called reinforcement learning. And honestly, the simplest way to think about it is like training a pet. The AI model tries out a bunch of different actions. It gets a reward, a little treat, for a good decision and a penalty for a bad one. And it does this millions and millions of times until it learns the absolute best strategy to get the most rewards.
So, how does this actually change things? Well, traditional portfolio management, the old way, is all based on generic stuff like expected returns and risk. But a new AI model detailed in this groundbreaking paper called the G-Learner, it flips the script. It's not about generic metrics, it's about optimizing for one specific personal goal, like making sure your retirement fund hits a very specific number by a very specific date. It's a fundamental shift from generic to deeply personal. And look, the proof is in the pudding. This chart from the research paper says it all. The black line there, that's your standard traditional portfolio. Now look at the red line. That's the G-Learner AI. As you can clearly see, the AI agent just consistently outperforms the old approach. And what's really incredible is that it does this even when it's fed pretty weak, basic market predictions. It proves the AI is a master at finding a profitable signal, even in a ton of market noise. But what if AI could go even further? I mean, what if instead of just executing on a goal you give it, it could actually figure out your goals for you, even the ones you can't quite put into words yourself? This is where we get to the truly mind-bending part of the story. The concept is called inverse reinforcement learning, or IRL. So if regular reinforcement learning is about learning the best moves to win the game, IRL is about figuring out the rules of the game just by watching someone else play. The AI watches an investor's decisions and basically reverse engineers the hidden goals they're secretly chasing. Now, the practical application of this is an algorithm called GIRL, which stands for G-Learning IRL. And researchers found that by just analyzing an investor's trading history, GIRL can actually figure out their hidden objectives, their real risk tolerance, their actual growth targets, all of their unspoken biases. This could be an absolute game changer for huge challenges like succession planning, where a family's true financial philosophy needs to be passed down through generations. This slide gives you a little peek under the hood of how it works. The AI basically tests thousands of different investor profiles against the person's actual decisions. It just keeps tweaking and testing and adjusting until it finds the perfect match, the profile that best explains why the human did what they did. It's not just crunching numbers, it's literally decoding their financial DNA. And all of this leaves us with a pretty profound final question. We started this whole journey with a great migration of wealth, driven by fear and uncertainty. We've seen how investors are struggling to adapt, and we've seen how AI is popping up as this incredibly powerful new tool. But if that tool becomes so powerful that it can understand your financial goals better than you can yourself, who should be in the driver's seat?